Technically speaking, the market is extremely overbought in the short term. We often hear the bulls say that when the RSI on the indexes goes below 30, the market is extremely oversold. That was a great buy point in this last sell-off. And now we are at a RSI of plus 70, so the opposite. This oscillates between 0 and 100, and so plus 70 should be overbought. Nasdaq 9 new highs in a row, and we can take a look at what happens when the RSI goes above 70. You can see eventually there's a little bit of a pullback. Goes above 70 right there. There's a little bit of a pullback, not much. So I'm not looking for a crash. I'm not calling it a top, but it could also be a catalyst to buy the dip. But you see what happened here at the pandemic, or actually this is September 2020, goes above 70. Market has a pretty good sell-off, and it goes above 70 here, just a small pullback, and then goes above 70 here, a little bit of a sideways pullback price action, and then a bigger pullback during the pandemic. You see the market kind of going parabolic here at the beginning of 2020, and it stays above 70 for a while, not much above 80, but above 70, and then it pulls back, and then it makes another new high right before the pandemic. This was an excellent topping formation because you see a diverging RSI pattern right here. So diverging RSI pattern where the RSIs make lower highs as the market makes higher highs. So the market makes higher highs, the RSI makes lower highs. So I like to talk through some of these ideas. We're not discretionary trading, but we like to talk through some trading system ideas, some technicals to potentially develop strategies. So I'm sharing that with you today. I also want to look at the market internals with the VIX up on the day, spiking higher as the market is also higher. And oftentimes we'll see the market internals lately will be weak. The market likes to go the opposite direction. The narrow indexes like to go the opposite direction of their market internals. But the VIX usually trades in its correct relationship. This is an inverse relationship. So if the market is up, the VIX is down. And if the market is down, the VIX is usually up. And so oftentimes the market will also trade in the direction of its market internals. But lately, like I said, the narrow indexes can diverge from that. But today the ticks are weak. The advanced decline line is certainly weak, minus 364. And we've seen the market rally in those scenarios. But the VIX would usually sell off. And so the market would usually continue to be correlated to the VIX. Today it is not. Today it is just going up and going against its market internals. It's going against the tick direction. It's going against the advanced decline line direction. And it's going against the VIX direction. And we are at RSIs of near 80 on the daily with 9 new highs. So we could be looking at a pullback. This market is very strong, so we're not calling a top, not calling a crash necessarily at this point, but sharing some technical ideas with you for potential trading systems. So it's Thursday. We had the FOMC yesterday, and we could see some profit taking going into the weekend. And I wanted to share these the technical picture with you on the long-term RSI as well as the market internals.